I'm Jessica with Smith.ai. I'm the product marketing manager at Smith.ai. So you'll see me hosting these webinars. You'll see me at trade shows. I'm typically the one that posts on our social media accounts. I send out our product update emails. I do all sorts of marketing stuff for the Smith.ai team. And today we have a special guest, Darren, who I'll let him really do a lot of his own introduction, but he specializes in financial planning for law firms. He has a huge background, a huge pedigree, and he is also the host of the Lawyer Millionaire podcast and has written the book, The Lawyer Millionaire. So if you've ever seen that, that's him, that's Darren. So Darren, go ahead and set the stage of why you're here and like why you are the authority to talk about this today, because you are like you are.
Well, thank you, Jessica. Yeah, excited to be here with all of you today. As Jessica mentioned, we have the book, The Lawyer Millionaire, also the podcast, The Lawyer Millionaire podcast. We're financial planners, not attorneys, but we are very unique as financial planners in that we only work with law firm owners. I come from a background of being, a general financial planner working with lots of different folks. And, there were some things about the way financial planners work that we wanted to change. I wanted to change. I wanted to make different. So we built a model of working exclusively with law firm owners. We built a service model really tailored to the challenges and needs that you guys face. Cash flow being one of those, extremely important. But also business planning in general. So, we recognize that for our clients, business planning is really number one. It's your biggest thing. It's your biggest challenge. It's your biggest concern, biggest priority. But also, it's your easiest pathway to wealth in many cases is to grow your business. And so we said, well, as financial advisors, let's offer business planning too. Let's make that a big priority for us. So we brought that into the work that we do. And we revolutionized the model. So instead of the traditional model of working with an advisor where it's investment focused and there's an investment-based fee, we've structured our services as memberships. And so it's a flat monthly fee. You pay for a membership. There's like 3 different membership types we have. And you get access to all of our services and benefits just right there and then. You don't have to transfer any money. You don't have to do anything like that. You just sign up, you become a member, and you get access to all of our services. So 3 main areas we focus on: wealth growth. A lot of financial advisors are focused there, of course. But the 2 that are a little bit different are profit maximization, which we're going to talk about a little bit today. That's cash flow and tax planning. And then, of course, business expansion, which is really thinking about how you scale and grow your business, not just to make more money, but also to have more time, which is critical. For a lot of busy law firm owners. Yeah.
Yes, having more time is critical. And that's something that here at Smith.ai, we talk about a lot with our services as well, is having more time and maximizing your time. Some other things we're going to talk about today are strategies for managing and forecasting cash flows, and diversifying your revenue streams. I know at least one person that registered had questions about that. And then are we able to talk about the profit first system?
Oh, yes.
Okay, perfect.
Let's please talk about that.
Okay. And that sounds perfect. And the importance of personal cash flow management to ensure both your firm and your personal finances are aligned for long-term success. Yeah. So that's the general overview of what we're going to dive into today. And you guys feel free to ask questions as we go along. I did already review the questions that came in on the registration page. So we'll make sure to cover those as well. And Darren, I know you have a few slides you wanted to start with. So if we want to kick those off, and then we can move into, after that, we'll move into, I have some questions as well to kind of make sure we cover everything.
Okay. Sounds good. Let me queue up the slides here. Um, let's see. I'll hit the share button.
Do you
Oh,
have it or do you need
sharing
it?
is not turned on.
Oh, no worries. Let me
You know, Jim and I, my lead planner, that happens to us all the time.
figure out how to do that
It's under
really
the
quickly.
host tools or
Yep, yep, yep.
yeah.
Yep, 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 yep. Um, okay, well,
And
that'll
if
work.
not, oh, you may be the host. Hey, that works, I
Close
think.
enough. I couldn't find the give share button, so we
Sounds
just
good. Okay, so we'll just go here and then let's see how can I go full screen with this?
Oh, I see you use beautiful slides. It's a very nice
Yes,
platform.
absolutely. Oh, I think it's this button here. There we go. Yes, beautiful AI. I love AI, by the way. If anyone's looking for AI tools, beautiful.ai is a great tool for making presentations. I'm not great at designing, but I'm great at content, and the AI will help you really design stuff. Anyway, optimizing cash flow. So here are some ideas I have for you. I mean, first of all, Jessica, we could just talk about the importance of cash flow. I mean, it's number one, right?
Yeah. You have a strange black box in front of your
Oh, it's the Zoom box, I think. Let me move it out of the
oh
way.
yeah.
How about
Move.
that?
Thank you, thank you. Great job.
Yeah. This is one of the areas we hear law firm owners need help with the most. You know, dealing with the ups and downs of cash flow, with the irregularities of cash flow. Some months it's great, some months it's not great. Some quarters it's great, some quarters it's not great. And cash flow really is king. I mean, you know, I hear from clients and others all the time about, you know, the balance sheet or the financials say we had a profit of X amount. Well, where did it go, right? Cash flow is real time, what's in the bank account. And that's critical for law firms because so many law firms are operating on such razor thin margins. If you're not tracking the cash flow, you don't know where the cash flow is going, you can find yourself in a very tricky situation. I have a whole bunch of different ideas, and we can dive into any of these as far as it goes for optimizing your business cash flow. Um, from a very basic standpoint, you or someone you delegate needs to be checking in on your cash flow on a regular basis. I do this right now for my firm because we're small, but at some point I will probably delegate this twice a month on the 10th and the 25th of each month. I go in, I review all of the numbers. Really, you should be looking at your numbers weekly. You should be reviewing your balance sheet, your profit and loss. You should be reviewing those numbers on a weekly basis, and you should have somebody preparing those reports for you. An up-to-date balance sheet, an up-to-date income statement or profit and loss statement. And that's really the same thing as a cash flow statement, unless you're using an accrual method of accounting or something like that. But that's from a very basic, fundamental starting point. Have somebody setting up those systems for you. A lot of folks use QuickBooks. I imagine a lot of you on this call are using QuickBooks, but are you really using it effectively? QuickBooks is complicated. I would highly recommend, you know, delegating or hiring somebody to manage your QuickBooks for you because it can be a lot. It can be a lot of work. It can take hours on a weekly basis just to go in and clean it up and keep it up to date. And you really need up-to-date numbers to run a law firm effectively. You need those numbers to be, you know, not numbers that were last year's numbers. You need last week's numbers. Otherwise, you're not going to know where you are and where you're going. So have somebody manage your QuickBooks for you. If you're not big enough to have QuickBooks, you really don't need QuickBooks at this point. There's another one I really like called Wave. And Jessica, have you heard of Wave?
I've not.
Okay. Wave Apps, waveapps.com. It's like a really simplified QuickBooks. And I like it because it's just much more intuitive. It's much easier to understand. If you're a solo or a really small firm, you just have like a paralegal and an assistant or something, something like Wave might be all you need. And you can manage it yourself. rather than a lot of the complexities of QuickBooks. You may not need all of that kind of stuff. The second area is cash flow forecasting. Once you are preparing those numbers, you need to be forecasting down to the penny where you are going to be next week, next month, next quarter. And you can do it, right? So it takes some math, maybe math isn't your thing. So maybe you need someone on your team who likes math. Now, I like math because I'm a finance guy, right? So this is easy for me. But I did this in my practice. We could project out. We have our clients listed out. We know the cash flow coming in from each of the clients. We know when it's coming in, so we can forecast what our cash flow is going to look like over the next quarter, even over the next year. I have a forecast for what my cash flow is going to look like 12 months from now. I know, and it's crazy, right? And a lot of these are projections based on my business goals, based on where I want to take the business. But I hit my goals because I've gotten that good at forecasting where the cash flow is going and moving towards. This can be tricky, depending on when clients are paying, how clients are paying. Are you a flat fee firm? Are you an hourly firm? Are you a retainer firm, right? But it is possible to do. You just have to know what's the likelihood of this money coming in at a certain time frame, and then you can project it out. But that's really important to be able to forecast the cash flow.
If you're a firm who's never done cash flow forecasting, where do you even start?
The most basic way to get this going would be like an Excel spreadsheet. List out your client matters and list out where you anticipate money coming in, when you anticipate money coming in from each of those client matters. Then the other side of the coin is projecting out your expenses. So you need to know what are the big expenses coming up this quarter, what's coming out when,
right?
And know, okay, at the end of the quarter, are we going to have a net positive or are we going to have a net negative, right? So that's where it's really critical. Now, the expenses part can be a little easier because you can look back historically.
Yes.
And you kind of know what's coming out. This could be a simple Excel spreadsheet, like here's where we are today, and then here's what we anticipate coming in over the next month, minus what's coming out over the next month, and where we'll be at the end of the month, something like that.
Perfect.
Now, there are more complex tools that you
Mhm.
can use. QuickBooks has more complex tools that can help you project out. But at a very basic level, something like that is extremely helpful. And I always did this with my business because I started my own business, and I was always petrified that I wasn't going to have any money. I was going to run out of money. So I just naturally always intuitively did this. But don't run your practice just doing client work and expecting money to come in and not really knowing what's coming in. You know precisely what's coming in and what's going out. That's going to give you confidence so that you can make investments to grow your business, to grow your law firm.
Great.
So some other things we can talk about also, speeding up the cash flow. This may probably is going to be more applicable to the firms that are billing by the hour, but let's think about your invoicing practices, right? First of all, the number one rule is make it easy for the clients to pay.
Yes.
Right? So are you accepting credit card payments? If not, you should be, right? Make it as easy as possible, if you can. Make it as easy as possible for the clients to pay. Send out the invoice in an email, have it clickable, have them able to just click through and pay online. That right there, number one. Number two, speed up the process, right? Have the invoices go out quickly, right? As soon as the work is done. Also, if you're like working on retainer and it's an ongoing matter, are you billing the clients monthly? That's tough for clients. Some people aren't. Some people are billing their clients quarterly. I mean, most people live paycheck to paycheck. They're not even high income people. Okay, by the way, well, then we could talk about that. So it's going to be very difficult for people to get a really big bill once a quarter and have to pay it, or once a month even and have to pay it. Make it easier than that. Bi-monthly, twice a month, invoice the clients for work that's being done. That also speeds up the time at which you're getting the money. It makes it faster for you to get the money. And think of other ways that you can speed up that cash flow. A lot of firms struggle with AR, with accounts receivable, and getting the clients to pay, right? So how do you do that? How do you reduce that accounts receivable time and get to a no AR firm, right? Think about how you can maybe incentivize clients to pay early. Could you offer a discount for them to pay early? And now everyone's like, oh no, I can't discount my services. Well, hang on, bear with me here. Maybe you could raise your prices and then discount, right? Raise the prices and then offer a discount. And then there really is no discount, right? Raise your rates, but offer a discount if it's paid early. Are you charging late fees? Are you charging interest? If clients are not paying on time, you are having to you are becoming a lender to them. And if they're not paying on time and you're not charging interest, you're a 0% lender. I mean, what a great place to be in, right? No one's offering 0% loans right now, but you are. So maybe there should be some interest for payments that are delayed into the future. So just some things to think through. Now, every practice is different. Some people are like, well, I can't, like I had a client who was working with really big institutional clients, and she's like, my clients will pay, it's just they don't pay on time, right? And she's waiting sometimes 6 months to a year to get paid for work. And she's like, well, I can't bug them because they're institutional clients. If I bug them, then they're not going to want to be my client anymore. Well, I mean, they're being quite disrespectful to you. You're offering them a great service, right? By not collecting on the work that you've done. So we strategized and we came up with that idea of maybe you could have some kind of a discount if they pay early. Other businesses that are, hiring you to do legal work, they may really appreciate that because that may help their bottom line, right? Get the money up front would be best of all, right? So a retainer. Yeah.
So you absolutely can bug people for to pay their bill, first of all. And if you personally don't want to do it, which is 100% understandable, what I would recommend in that case is to set up a automated billing reminder.
Yep.
That does not come from you. It comes from a generic billing email address. Then it's not personal. Then it is strictly business.
Yes.
But we did, Darren, we had a question in the chat. How do you handle credit card service fees? Do you build it into the fee? Do you add on extra costs? Do you give cash discounts? What do you think about that?
You can do all of those things. It just depends on what you feel is best for your practice. It would be, those credit card fees can be a lot. So, adding that in, a lot of places do that. They add that in as a convenience fee to use a credit card, or you could offer a discount for a cash payment. That's a really great question. Those are great things to think about. And I think all of those could be strategies you could implement. It just really depends on what's going to work for you and your practice and the clients that you're serving.
And then another question is, do you think a $10 a day late fee for bills under $500 a month is excessive?
$10 a month?
$10 per day for a bill
day.
under $500 a month.
That might be a little much. I would do it as like a percentage, like an annualized percentage, right? So you owe $1,000, it's an annualized percentage of 10%, if your bill isn't paid on time. You really you want to consult with your bar association also, and make sure that your whatever you're doing isn't going to raise any eyebrows. It shouldn't be so high as a percentage that it's going to make you look like a payday lender. I think somewhere around, in the neighborhood of 5 to 10% would be reasonable on an annualized basis. Yeah. Any other questions, Jessica?
That was it from the chat.
Okay.
I did just want to say, related to the credit card fees, there are a handful of states, I don't know what they are off the top of my head, where you're not allowed to charge credit card fees. So just check with your local state to make sure before you do that.
Yes, definitely check. And if you're not allowed to charge for credit card fees, also check if maybe you're allowed to, instead of that, offer a discount for like a cash payment, right? So kind of
That,
do it in an indirect way, basically.
exactly.
Yeah.
Exactly.
Okay, so invoicing, yeah. Another idea, of course, is trying to get the money as upfront as possible. So, having a retainer system if you're billing by the hour. And a friend of mine suggested having a retainer, but not billing against the retainer. So maybe you have a retainer, but the retainer is just like an emergency fund if the client doesn't pay. You have the retainer, but then you're still going to invoice the client for work that's being done. All goes well, they get the retainer back at the end of the engagement, right? That way, if they're not paying the invoice, you can dip into the retainer, but ideally you don't have to. That's going to cut down on a lot of administrative work because it's a lot of tedious work, doing your IOLTA accounting, put the money in your trust account, bill against the trust account. If you just put the money in there, it's there as a reserve if the client doesn't pay, and then they get it back at the end of the engagement. Then you've eliminated a lot of tedious administrative work that you have to do. You've also given yourself kind of an insurance policy if they don't pay. Now, I am a big fan of flat fee engagements. I think they're great for clients. You can do kind of a hybrid approach where maybe it's a flat fee that for all of these services, but if you go over a certain number of hours or you need to go into these extra areas, there might be an additional charge. But I think the flat fee is great because it really will incentivize efficiency. Number one, it's great for the clients because they know what the bill is going to be. It gives them certainty, and it also gives you certainty. You know exactly what you're going to get for a matter. So it eliminates a lot of that cash flow uncertainty. And I just love flat fees. I think they're great. We do flat fees in our business. So yeah, I'm a big fan. Did we have a question on the flat fees versus the hourly?
There was a registrant said we have both fixed rate and hourly. How do we calculate how to best maximize both rates? We seem to not bill enough hourly.
Interesting. I would definitely want to ask a lot of follow-up questions, but I think you need to really have good data. I think one of the data, you need to have KPIs that you're tracking. So even for your flat fee work, you should still track the time it takes for a matter to get resolved. You should still track the amount of time that people are spending on that. So then what your hourly rate is, how efficient you're being with time. And I think that would give you some really key insights into how you can, maximize your profit margins in that kind of a situation. Yeah, I hope that helps on that one. And then you can think about improving that time efficiency. What are some ways you can use software, outsource, delegate? If one of your high paid associates is doing really tedious, $20 an hour work, can you outsource that to somebody else? And you can think about who's doing the work and how that should be delegated. That will really drive efficiency and profit in your firm. All right. Revenue streams. Oh, expense management. So, this is just key. I mean, it's so easy as a business owner to sign up for things, and everything's a subscription now. So we have all
Mhm.
these things that we're signed up for. Ooh, this software looks really cool. Let me sign up for it. And then we forget that we're signed up and we're getting billed, $100 or $200 a month. And those expenses add up over time. So what you need to do is on a regular basis, maybe annually, maybe quarterly, review your expenses and ask yourself, are we really using this service or this product to its maximum usefulness? Do we really need this anymore? Can we eliminate this? Always be on the lookout for ways you can reduce expenses, right? On the other side, are there services that we're using that we really love that we're going to be using for a long time? Can we set that up on an annual payment, right? And maybe get a
Yep.
discount. Um, are there services we're using? Maybe we can shop and find a better, more cost-effective provider. So that is a way that you can really drive some profit and maximize your cash flow. Just regularly remembering to look through your expenses and evaluate which ones you still need.
When we talk about expenses, can you share some tips about developing and sticking to a expense budget?
Mm, yes. I think profit first becomes a very good way to do that,
Hmm.
because it builds in, how much you can afford for these things. And this
Hmm.
all goes back to cash flow forecasting, right? So if I can forecast out my cash flow for next year, I know what I can afford to spend. And then these decisions become emotionless. They become very matter of fact, right?
Right.
Maybe I'm talking with a salesperson at a company and they've got a great product and I really feel like I'm being pressured into buying it. But if I look at my financials and it's like, doesn't really make sense for me. Okay. It's a matter of fact. Well, great. Or here's the classic one. People come to you, they want you to sponsor their thing, right? Everybody wants you to
Right.
sponsor their thing. Sponsor my golf outing, sponsor this, sponsor that, and you should do some of that, right? For your community goodwill. But if you have a certain amount that's allocated to that stuff, then you can very matter of factly, once that budget's been used up, you can just say, well, we've already allocated the funds for that purpose, and we don't have any money left for
That's
that
right.
purpose.
That's right.
So that's very helpful.
And are you seeing any areas that firm owners or operators are seeing significant cost savings in expense management? Like any areas that are extra leaky?
I think software is probably the
Hmm.
most leaky, just because we so easily sign up for things. And there's always new software being developed and created.
Right.
So, we were using one type of note taker for our Zoom meetings, and it wasn't really great, and it was kind of expensive. And so we shopped around and we found another one that was a whole lot better and a lot less expensive,
Right.
So yeah, keep evaluating those things and see where you can negotiate. Are you working with a consultant in a particular area? Maybe you come to them. I was working with a marketing consultant, um, and they told me that they were going to be raising their rates. And I told them, I was like, hey guys, we've been a really, really great client for a long time. We've worked with you guys consistently for many years. Is there some kind of a loyalty discount that you could offer us? And they said, you know what? Forget about it. We're not going to raise your rates. We'll keep you at the same rate. And I was like, okay, there's a couple $100 a month back in my pocket. You know
Right.
what I mean?
All you have to do is ask.
And let's think about it. $100 a month. You could so easily cut $100 a month out of your spending budget. That's $1,200 a year.
Right.
That's not insignificant. And that's a small amount. Imagine if you could do that a few times, you could
Hmm.
very easily save yourself $10,000, $20,000 over the course of a year just by keeping tabs on your expenses.
Hmm. Yes, you could.
So a couple of other areas I'd love to talk about: revenue streams, diversifying revenue streams. It doesn't have to be that the only way you get clients or make money is clients come to me with this matter and I do this type of work and I bill them. I encourage my clients to think creatively, right? Is there a practice area that is very closely aligned to your current practice area you could maybe add? Is there maybe an ancillary service that is very much aligned with what you do, but could be a side revenue generating piece for your business? The easiest example is like business law. If you practice business law, maybe you could add business consulting services or business growth strategy. And you could also, provide some ongoing coaching for business owners. That's kind of what we did. You know what I mean? Add that into your list of services as something you can do for your clients. So I encourage my clients and others to think outside the box in terms of maybe there are some other things. And we call this, another way to think about this is a term called value stacking. So if somebody comes to do work with you, you could charge a premium for your work if you have additional benefits and services that you're stacking in to what you're providing, right? Trying to think of a good example. I mean, I can just, in our business, right? Tax planning, right? We've built in tax planning. That's an additional layer of service to what we already do. It's closely aligned with what we do, but it allows us to charge a higher fee for what we do because we're doing more work for the client, right? So are there things that are, maybe they're not exactly law practice specifically, but they're very closely aligned? They would be in the client's best interest for the client to have access to these additional services and benefits. And you could offer these as either part of your package or another revenue source for you. The other way to develop other revenue streams is through having referral partnerships. That can be really, really huge. But be careful that your business doesn't rely exclusively on those referral relationships, because if one of those referral relationships decides that they want to, go in a different direction, let's say you have a personal injury firm is getting all these leads and sending you the ones they don't want, and that's your main source of business. Well, be careful, because what if they change their model and they decide they want to keep all the leads to themselves? Then you're in trouble, because there goes your revenue stream. So don't rely on that exclusively. That's why it's important to have a diversified range of revenue streams. Yeah. Anything on that? Any questions there or things you wanted to add, Jessica?
No, thank you. I didn't see any questions in the chat either.
Okay, cool. But yeah, just think creatively. Get a little bit outside the box and think, what are some other things we could do for our clients that would, especially if they're recurring revenue models, that is where the gold is. If you could set up some kind of a subscription model or a recurring revenue model, number one, that's great for your cash flow. But more importantly, and this is why we love it, it makes your business more valuable, because you are reducing the risk of income coming in. So your business is going to be more attractive to a potential buyer in the future if you have a solid source of recurring revenue. Okay, accounts receivable, we talked a little bit about that. The last one here is really liquidity. As I mentioned, I think earlier, so many law firms are just running on razor-thin margins. There's no cash in the firm. All the money gets distributed. That's a big mistake. You need to have sufficient reserves in the practice, right? The practice needs to have its own high-yield money market account where there is money being squirreled away as an emergency fund for the firm. That's really, really critical. Those are firms that survived COVID, are firms that did just that. Or they had a line of credit established at a bank well in advance. You get the line of credit when you don't need the line of credit, because if you get the line of credit when you need it, the bank's not going to give it to you. But even the line of credit can be dangerous, because if banks decide they don't want to lend anymore, they can just decide they don't want to give you a line of credit anymore, right? So the best way to do it is cash. Cash is king, right? Have an emergency fund for the firm separate from you, in the name of the firm, in the name of the practice, where you have some funds squirreled away. And I would recommend at least 6 to 9 months worth of operating expenses. And that's your red line. You're not going to go under that red line. You're always going to have that money. And if you need to dip into it, you're going to work on rebuilding it almost immediately. So those are the main points I have on cash flow. We can talk a little bit about the profit first system. I love the profit first system because I think it's just a very easy way to do accounting. It's banking accounting by banking, basically. So with profit first, if you're not familiar, the main idea is that you set up separate bank accounts for different purposes, and that way there's always money there for different purposes. And the other part of profit first is the name profit first, is that you prioritize setting aside your profit ahead of time instead of profit being what's left over. So, excuse me, here's how it would basically work. You would have 5 accounts set up. You have an income account where all the money flowing in comes to first. Then from there, it's going to be distributed into each of these 4 accounts. First, you're going to allocate funds to your profit account. And if you're starting this for the first time, start with a small amount, like 1%. And I tell my clients, you're not going to miss 1% of your revenue. You're not going to miss it. If you leave it in your operating account, you're going to spend it. But if you take 1% of everything that comes in, take 1% off the top and put it away in a profit account that is separate from all your other accounts, you're going to be setting aside additional profit for yourself that you're not going to spend, and you won't miss it. Then you have your tax account. Very critical. You have a certain amount of money going into the tax account, maybe 25%, so that you have money to pay taxes when tax time comes. Do not let the IRS become your lender. It's a very bad situation to be in, because it's a hard situation to get out of. So if you're ahead of schedule, you have money set aside to pay taxes. You're not going to be scrambling to make your quarterly estimated taxes. You're not going to be scrambling when your accountant comes to you in October and says, here, sign last year's tax return. Oh, by the way, you owe 60 grand. Oops, where's that going to come from? You know what I mean? So it's really best practice to have that tax account. Now, here's the beautiful thing. You may find yourself in a situation where you have more money in the tax account than you need. What a great place to be in. There's some automatic forced savings there. Let's say I have 50,000 in my tax account and I get my tax bill and it's only 30,000. Oh, well, hallelujah. Great. We got some extra money. That's a great spot to be in. Then you have your owner's compensation account. That's where your money goes. The money that you are going to use to pay yourself with your W-2 and your draw, your payroll and your draw. It's all going to come from here. And then finally, you have your OPEX. So OPEX is last. Operating expenses is last. Everything is left over. That's what we're going to use for growth and for investment and for operating costs and things like that. Now, you have to tweak the percentages. We've done this in our practice, and the percentages, we're always tweaking them a little bit to try and get them just right. Start off with a small amount in profit, figure out what your taxable rate is, approximately your average effective rate in taxes. That should be your tax percentage. Owner's compensation, whatever you pay yourself. And by the way, you should be paying yourself a regular income. We should have probably talked about that on the business cash flow side. So many times what I see is law firm owners are taking money out of the firm when they need money, and then they're putting money back in the firm when the firm needs money. Big mistake. It's going to be very hard for you to grow your practice and manage the financials of your practice. So pay yourself a regular paycheck and set up a draw that's on a regular basis, right? So that you're not just drawing money. I had a problem with the air conditioning, so I took $10,000 out of the firm to pay my repairman. No, don't do that. Your firm is not your piggy bank, and you should not treat your firm like your piggy bank. That's really, really critical. And if you're doing that, it's going to be very difficult to grow your practice. You've got to get cash flow stable first. Then you can grow, then you can invest. But it's difficult to get out of that cycle. Anything you wanted to add there, Jessica, on Profit First?
No, this has been great so far.
Fabulous. Well, we can apply the same concepts personally. So you can think personally about this as well. How can you optimize your personal cash flow?
Yep.
Personal budgeting. No one likes to do that. So many, the folks that I work with, when they first come to me, they're making good money, but they have no idea where it's going. If that's you, you need to set up some kind of system that's going to first track your cash flow so you know where the money is going. And then you can start to be a little bit more strategic about where it goes. One of my favorite tools for personal budgeting is Monarch Money. So Google that one when you get a chance. It's like Mint, but better because you have to pay for it. And the reason I like the fact that you have to pay for it is because that means there's no ads and there's no, secret backroom deals where they're trying to sell you stuff. Yeah, so check out Monarch Money. That's one that we actually use with clients. We can collaborate with clients. But the difficult part about programs like that is that they do require some maintenance. Now, what's beautiful about Monarch is you can automate a lot of your budgeting. So you can automate the categorizations. It's just really, really cool. If you want to take a look at it with me, grab some time on my calendar and we can take a look at it together. Debt management is another area. I have clients who are in their 50s, late 50s, still have student loans. Student loans are a big thing for a lot of folks out there. And a lot of attorneys, there's pressure maybe among your peers to live a certain lifestyle. So it can be very easy to accrue debt. Key points on that, just make sure that you're paying down those high interest rate cards and high interest rate loans first. Prioritize those first. And make that a part of your budget. If you're stuck in a cycle of credit card debt, the only way to get out, at least what I've observed, is to just stop using the credit cards and go to a cash system. And then, okay, I've got this $70,000 in credit card debt. The only way you're going to pay that down is just stop adding to it. And start just paying for things with cash. Then you can set a target. Okay, I'm going to put $1,000 a month on my debt until it's gone. And then just set it up, right? So it's automatic. That is really from what I've seen in practice working with folks, as long as you're still using the cards, you're never going to get them paid down. Income diversification, you can think also about that in terms of your personal life. A lot of law firm owners I know love to invest in real estate. Or maybe there's other businesses you want to invest in. It doesn't all have to be the stock market. It could be other types of income generating investments to supplement your legal practice. Some kind of side hustle that you really love, right? Speaking engagements, right? Whatever it is. What do you really enjoy doing? Maybe you can turn that into a passive stream of income for yourself. And then finally, of course, the liquidity factor. So you need to have liquidity on both sides, personal emergency fund and business emergency fund. The business is not your personal emergency fund, nor should it be. That's really important. And one more thing I want to share with you.
That's why you have to pay yourself.
Yes, absolutely. You can apply the Profit First idea to your personal cash flow. Here's just one idea of how that might work in practice. You have an income account where you pay yourself, and then from that account, you're going to distribute money to other sub-accounts, a financial freedom account, or or accounts. Those could be your retirement investments, your 401k, your IRAs, could be additional investments. Number two is that emergency fund, that true cash-based emergency fund for unexpected expenses. Once that's filled up, you don't need to put money in it anymore. You can direct those funds elsewhere. The third account is the fixed expenses account. So this is where it really gets critical. You have one account where all the subscriptions come out of, all the fixed things come out of, like mortgage, rent, car payments, insurance, utilities, debt payments, all the things I can plan for. Because I know what those are going to cost. I know, next month, all of these things are coming out and it's going to be X amount of dollars. So you can allocate funds to that account, and you're not ever going to spend money from that account like at a restaurant or things like that, because those funds are already allocated, right? I have X amount going in here. That's going to pay the mortgage and everything else. Where you're gonna take money for, like a restaurant or groceries, or any kind of going to the movies or spending, that's your day-to-day spending account. Now, if you want to get real advanced, each member of the household could have their own day-to-day spending account. So for a couple, each spouse maybe has their own day-to-day spending account. Why is it important to have a separate day-to-day spending account? Well, I do this. And what I love about this is I can look at the day-to-day spending account and I know I have X number of dollars to spend. And I can go spend it right now. And I know that's not going to disrupt anything, because nothing else is coming out of that account. There are no automated payments coming out of that account, right? I can go to the grocery store, I can spend, I know I have X amount to spend. I can just look at I can pull up my banking app and I know, okay, I've got this much money to spend. Boom, done. I don't have to do any fancy budgeting. It's right there in front of me and I know what it is. And you could also do this for kids. You have, each kid can have their own separate account where they put their money and stuff like that. And then finally, you have your fund money account. That's, saving for vacations, for leisure, travel, other stuff you guys want to do as a family. Any questions on this?
No. We are coming up close to the end of our time, so I would love to encourage everyone that's watching. If you have questions, please put them in the chat or in the Q&A to ask Darren. We have about 8 minutes left, so please do ask any questions if you have them. Darren, I'm not sure what else you want to talk about, but I'd love to talk a little bit more about your book, because I know you have the book, The Lawyer Millionaire. What are some of the key topics of your book? Is it towards personal finance, or is it towards firm finance?
Yeah, it's a little bit of both.
It's a little bit of both. Okay.
The book is meant to be like all of my knowledge put down on paper. It's really supposed to be like a DIY guide for your personal financial planning for lawyers. So if you're looking for a resource that just kind of will give you that one-stop guide on everything from when you graduate and first, get that first job, all the way up until, retirement and figuring out how to sell your practice, right? The book kind of walks you through each of those, the life cycle from early career to mid-career to late career, and all the different things that you need to think about along the way. From some of the basics, getting set up, to some of the more advanced things like tax planning and strategies, investments, business structure, all the way to retirement and succession planning. Yeah.
Quite a lot.
It's a lot. And there's not a lot of fluff in there. It's good content. Some books are, it's like it could be one article. This is one main concept, right? And a lot of this is meat and potatoes.
Perfect. And because we have a lot of firm owners here, I'm not sure how many have worked with financial planners or financial advisors in the past. So for people like me who are not in the financial world. I've never worked with a financial advisor or financial planner in the past. If I was looking for someone to either help me with my firm or to help me with my personal finances, what kind of questions should I ask, or what should I look for?
Yeah. I think one of the key things is to know how your advisor is compensated, so
Hmm.
that you know if they are going to be giving you objective, clear, unbiased advice, um, or they're going to be um, steered in a particular direction. So I would suggest that you look for a fee-based advisor, or better yet, a flat fee advisor like we are, who's just going to charge that flat fee to give you strictly advice and is not going to be compensated elsewhere. So, like, for example,
Not commission based.
not commission based. Now, those people serve a purpose, in terms of maybe connecting you with products and services. But in
Hmm.
terms of getting, real straightforward advice, you want someone who is really free from any kind of conflicts of interest.
Right.
We don't sell any insurance. We advise our clients on insurance. We'll review their insurance policies, we'll analyze them, we'll make suggestions, but we don't sell them. So that way, we are not going to steer you in any particular direction. Yeah.
Okay, perfect. We did have another question in the chat. You mentioned Monarch. Are there any other applications you would suggest for businesses?
Yeah. The other one I really like is
Hmm.
waveapps.com.
And
For
that
your,
was the QuickBooks
it's
alternative you
a simple
mentioned.
QuickBooks. Yeah. The QuickBooks
Hmm.
alternative. And I mean, gosh, there are so many, um, for lead management, for project management, for managing your business
What
strategy.
about expense management? Because we did spend a significant amount of time talking about expenses.
Yeah, I like Wave for that purpose.
Okay, great.
Yeah, because Wave is very much like a personal budgeting program,
Hmm.
but for business. So you go in, it's a very simple interface. It's very easy to understand and intuitive. You would think I work for them, right? Like I just been using them for so many years. I just really like what they have. Yeah.
Oops, I was muted. Are
Okay.
there any other questions from anyone in the audience? I only have one last
I would
question.
say,
Go
if
ahead,
you
sir.
want to pick my brain on other softwares as well, there's just so many that we know of and that we use. I can't even think of them all. But for other aspects of your practice, be happy to do that with anybody as well.
Absolutely. Okay, everyone, I'd love to thank you all for coming out. Thank you, Darren, for
Yeah,
coming to the show today. I will send out the recording, so if you missed any of it, I will share it. If if you don't get the email today, first thing in the morning, for sure. To reach Darren, he is on LinkedIn. He also can be found at thelawyermillionaire.com. That will
that's
take you
right. That's
right to
right.
their website. Very easy to remember. Again, I'm Jessica with Smith.ai. I think a lot of you already know me, but if you don't know Smith.ai, we are a call answering service. We can do everything from answer your calls, qualify leads to see if they're a good fit for your firm. And if they are, then we can help book consultations on your calendar and even take payments for those consultations, to help with that cash flow right there. So let us know if you need anything. Again, I will send out the contact information for both of us after the call. And I hope you all have a great day. Thank
Yeah.
you so much. Thank you,
And
Darren.
Jessica, we've been using Smith AI for, I think, 3 or 4 years now, maybe longer. Yeah. And just you guys do a really great job.
Thank you so much, Darren. I appreciate you saying so. All right, everyone. Have a great day.
All right. Thanks for having me, Jessica.
Bye.